See, retail investors and HNI we have already discussed, right? And then we discussed the entire flow. But now I would like to discuss about the mutual fund, hedge fund, private equity investments, and family funds. If I talk about family funds, so as we know, guys, Hindu undivided family, as per the Hindu undivided family, let's say, you know, unwell and want to, let's say, set up an family funds, they can. So they set up proper fund and manage the entire fund investments or investment of their family through their, the main channel. So that channel you can call it as a family funds. And if I talk about the global size of the family fund market, let me just see. You can ask question to the GPT. What is the size of family funds? Global size of family funds. And the renowned names in industry. See, if you have a list of family funds, I'll tell you something. If you're an entrepreneur or startup founder, so simply, just reach out to the family funds or their heads and request for a funding. They'll simply do it because they don't check much of, the details of your business, because family funds, you can just avoid investment banks and directly reach out to the family funds to invest in your business. So these are the popular names like Bessemer Trust, Wealth Simple, Rockefeller Capital Management, okay, and even Glenmed provide investment and wealth management service to the family houses. Trust, okay, these are not trust, basically it seems something different. Seems something different. I am looking for family funds business size. Oops, 6 trillion. Look at this, guys. The family offices manage approximately 6 trillion as of recent years, and these figures can vary as the family office landscape continues to evolve and expand. So you can find opportunities in family office businesses as well. You can support families to manage their wealth. Maybe you can try to build a technology in family fund admin space, and you can contribute something for a transformation and make money out of it. But yeah, so if I talk about family fund, it means the fund which is created by the family only, and they also invest, the way means retail investor invest, let's say, the own individual money in different securities. The same way, the all family members, they come together and they invest money in different companies as per their investment objectives. So those funds, you can call it as a family funds. Now if I talk about the mutual funds, right? See, mutual fund, it is the purely for common people, guys. When we say common, it means we all are comes under common people. We all, for example, let's say the retail people, we can invest from minimum 100 rupees in mutual fund schemes. But I'm more interested to teach you how mutual fund structure looks like. So these are the key points. So let me chart out the different structure like this for mutual fund and all other funds. let's say mutual fund. So mutual fund, it means, the common people like us, thousands of people or millions of people, they come together. Fund manager basically raise funds from the common people. I'll just draw this a couple of. So what happened to this? Oops. Look at the flow. Let's say common investor like us, the investors A, investor B, investor C, investor D. All, the mutual fund manager basically registered as a trust. Registered as a trust. So when they registered as a trust, so it means there won't be any limit as such, in terms of the participants. Maybe you can raise, funds from the millions of people. Okay. And this trust always, will have, guys, director. Trust will have a director. And this director, you can call it as a fund manager. Trust will have, come on, director. So this director, you can call it as a fund manager. And fund manager basically raise funds from all the investors. So instead of raise, I would say the people like us who actually contribute funds. So raising means wouldn't be proper wording for mutual funds. Basically common people like us who contribute funds, and fund manager who monitor everything. So same fund, the responsibility of fund manager would be fund manager deploy funds. Deploy or invest. So it means highly qualified people, they registered fund institute, they actually qualify some NISM courses, they like mutual fund distributor or mutual fund AMC manager, fund manager, they complete some certain courses, certifications, then registered with SEBI as a fund manager, apply with SEBI, their skill sets and everything, and then they can then SEBI approve them as a fund manager, and then they go to the market and raise investments from the investors. So once they, let's say, raised funds from the investors with the, through different schemes. See, when they raise funds, you might see schemes names like let's say, you would have heard even, right, tech fund, tech small, small cap fund. I'm sure you would have heard this at least. Then it could be, let's say, then banking, the mid cap fund. You could have heard scheme like, let's say, small cap, multi small cap kind of. These are just, naming conventions. Small cap. So these are the basically fund schemes. So the investors invest their money, guys, means, the fund manager raise this investments under different schemes. Now your question would be, sir, why, the schemes are important, or to understand the schemes are important? Because the schemes align the investment goals. Investment goals, risk, right? The investing strategy, then the investors, the interest as well, means in which sector that the investor has interest to invest. So basically, the investors, go through the investment prospectus or fund prospectus. On the basis of that, investor basically, take the investment decision, and that investment decision would be means on fund manager. So whatever fund manager has committed, so fund manager should follow it. And same thing you can see. So when you select any investments, the schemes, XYZ investment schemes, so you can go and check the investment objectives as well, for small caps and everything. So fund manager defined everything, risk of investments, let's say, the strategy, what would be the strategy, the expenses of that particular schemes, everything, means everything, they define it. And under every schemes, let's say, you might see, let's say, under, let's say, fund manager deployed, they decided to deploy funds. Now let's take example, let's say, total investments, received 1,000 crores from the 4 different investors, 250 crores from each. So that amount fund manager can, the or else, okay, anyways, would be appropriated if we have, written down here, but that's fine. Then the same, raise funds, fund manager deploy in certain instruments. So now those instruments, it could be equity, bonds, debentures, like the way, means the retail people, they purchase it. In the same way, the fund manager basically, the purchase securities and invest money, raised money in stocks, bonds, money market, and even loans or other segments if there are any. So same schemes, guys, same schemes. Let's say tech fund could be focused on stocks, or banking fund, it could be focused on, let's say, money market or bonds. And if I talk about multi small cap, it means maybe that the small cap funds can target to the any specific financial instruments and even companies from the that particular background. So for example, let's say uh, if I talk about small cap, it could be, let's say, from IT side, tech side, uh, Happiest Mind could be one of the small cap company, right? Birla Soft. But one thing, if you want to differentiate, how, sir, we can differentiate mutual fund and private equity or hedge funds from, let's say, means each other. See, mutual funds, they are not allowed to invest in startups. Mutual funds, they are not allowed to directly invest in any, unlisted companies, because the mutual funds, they are highly regulated and only allowed to invest in stocks, bonds, money market instruments, and even loans with the permission of the regulator, because AMPI and even SEBI both regulate this mutual funds very closely. So it's not easy to divert, the funds in unlisted companies, since it is highly risky, and not allow mutual funds to take a risk and bet on public money, because since it is a trust, it means it's a public money. It's not the fund manager's money. Fund management, basically this trust, the charge the management fees to the investors, and fund manager receive the salary like director fees. So fund manager is just a director who is directing or giving directions to the investment. That's all. So I don't want to chart out everything, but this is how you can see the structure. Like, the mutual fund manager deploy the funds in stocks. When we say stocks, it means Happiest Mind and Birla Soft, it could be that stocks. And see, one more important thing, mutual funds, they can't invest through OTC market. They are only allowed to invest through exchange route. But private equity market, they don't invest through stock exchange. They directly invest through OTC market. That's how you can, the differentiate. But anyways, I'll explain that as well. So now if you see, the fund manager can, they allocate this, let's say, money to the different schemes. Could be 200 crores to tech funds, maybe 300 crores to banking funds, and small cap, let's say, 500 crores, or 400 crores, and 100 crores would be liquidity. So this portion, you can call it as an allocation of funds. So fund manager manage the, the funds effectively, allocate funds to the each, different schemes, and invest money, from that schemes to the different asset classes, stocks, bonds, money market, and loans. These are, we can call it as a asset classes, right? We'll call it as a asset classes. So all funds will be invested in different asset classes. So funds will be invested in asset classes. So allocation of funds. Right? Oops. And this is how, when we say allocation, it means placing money in different, assets. We'll call it as a allocation of money. Okay? And See, when fund manager place the investments across different the asset classes, see how structure looks like. I don't want to now means write the everything in details, because this is not something could be this, just to understand. For important thing would be like just to understand how fund structure looks like. See how mutual fund looks like. Now if you ask me just the simple definition to explain anyone, you should explain in a way. Mutual fund, it means it's a pool of investments, right, where the investors like common people contribute little amount of funds in the different the investment schemes, which is designed by the fund managers who work as a fund manager with the mutual fund companies. Mutual fund companies, we can call it as a AMC companies, which is asset management companies. Why? Because they manage the asset of investors, right? And the fund manager means highly professional people. They work as a fund manager and allocate the raised funds to the certain asset classes, manage the risk, diversify the investment portfolio, and generate the return on investments effectively for their investors. So that pool, we can call it as a mutual funds. There are two types of mutual funds. One is closed-end funds, another one is open-end funds. Open-end fund, it means the every month the investors, they can keep investing money in the mutual fund schemes. It's like it's like a SIP. And closed-end fund, it means so investment it will be open maybe once in a year, or once in a lifetime of a funds, and then after the investment will be closed, and then the fund manager will manage the investments and directly redeem the investment and return the investors money. So this is how you can explain to anyone, right, if someone asks about mutual fund. Maybe very from the very technical side, you might see questions around, hey, do you know NAV, net assets value of the fund? All right. See, if you have understood the structure, if I talk about, let's say the same structure, like fund invested in tech fund 200 crores, banking fund 300 crores, and even multi small cap 400 and 100 crore, which is a cash liquidity, right? So that all investment value you can treat as assets. And of course, to operate this structure, there would be certain expenses like management fees. So instead of management fees, I would say expense ratio, where fund charge it.
This meeting is being recorded.
Expense ratio is nothing but it's an expenses, so which is charged by the AMC, which is asset management companies, to the investors to managing the investment. Sometime you might see entry expenses. Sometime you might see exit expenses. Right? So these are the expenses which also comes in mutual fund, where trust basically, or AMC asset management company, that company charge and take care of that part, all the expenses, and investors pays it. But basically all the expenses that we deduct from the total value of investment, which is this schemes the total cap, and that the total cap or value of investment based it would be based on the value of the investments where the fund has invested. All right. See, market, the investment which is linked with the investment which is linked with the market securities, and that the market security price, which is the volatile or sensible, it means, or sensitive, I would say, where it always changes. And when the price of security changes, that impact on net assets value of the fund. If the security price, let's say, goes up, you might see positive change in NAV. If security price, let's say, goes down, So you might see, the mutual fund price also, means net asset value price also goes down. But in both the cases, the expenses, the investors will have to pay it no matter what. And the NAV means net assets value of the funds. There is a formula basically, you know, the NAV formula. Total assets value minus total expenses, so is equal to your NAV means net assets value that you can calculate, and NAV you can just update like value divided with total outstanding unit. The way companies the way companies issue the shares in the market, right? In the same the manner, mutual fund companies issue the mutual fund companies issue the units to the shareholders in the market. And if you see the unit, which is which is really important terms in this, the units basically you can see here where the all investors receive units. So same units you can see at here as well, where so it means the mutual fund record that units and ensure that the unit for per price, which is, let's say, calculated correctly and updated their books, because the unit price which fluctuate because it is linked to the investments like stocks, and as you know the stock price always changes. So it means every day the stock price changes every day. It means every day. And when the price changes, guys, again automatically NAV changes, and that's what NAV we calculate daily in a mutual fund. Net assets value calculated daily. Once the market closed, we pull all the data, expenses, income, assets, liabilities, everything we computed, check the price, and we update the details in the books of account. And if, let's say, if you want to work as, now let me just tell you the market size of the mutual fund, because we have discussed lots of technical things, and this is what your mutual fund looks like. So if I talk about now the key things about mutual fund that everyone we should know it, which is size of the market. Size of the market, if I talk about Indian market size, which already crossed 100 lakhs crore investments. See, the common people like us who have invested like 100 lakhs crores in mutual funds. In LIC we have invested around 40 lakhs crores. Just imagine. So it means 140 lakhs crores the common people, as as a common people, we have invested in mutual funds and insurance product, right? Can you hear me, guys? Hello? Can you hear me? Okay. What happened with screen? I don't know. It was shared already. That's what you should be very active. You guys don't look at screens. Look at this, how mutual fund structure looks like. The investors means fund manager raise funds from the investors, launch the different investment schemes. Mutual fund body work as a trust, then invest that money in different asset classes like stocks, bonds, money market instruments, loans, and calculate the NAV at the end of the period, like total assets minus total expenses or liabilities. That will give you the net assets value of the fund. And if you want to calculate NAV for per shares, your formula would be value divided with total outstanding units, like the stocks. when the fund manager, let's say, raise funds under different schemes, allocate some certain amount of units to each investor. So on the basis of units, mutual fund manager can calculate the NAV and share it with investors. As a trust, they charge some certain expenses like expense, entry expense, exit expense, so that all expense you can call it as a load, exit load or entry load, or the load means expenses basically, which is required. So that's how your mutual fund works. Now I was talking about the key details so that we should know it. Very key detail, guys. Right. So if I talk about key details, see, size of the mutual fund market is already, as I said, the Indian market size, which is let's say 100 crores, that the mutual fund market crossed already. 100 crores. 100 lakhs crores, my bad. And if I talk about the global market size, which is 21 trillion USD. In North America, which is the largest market for mutual funds, or even for all funds. And this is something, it's a this is highly growing market, highly growing segment in terms of private equity, hedge fund, even venture capital businesses, or even if I compare, this mutual fund with insurance or investment business, I would say mutual fund, which is one of the segment, which is highly growing space, and even highly liquid, investment pool as well, and which is helping to the large number of, the investors to generate return on investment. Now, in terms of different jobs, if you ask me, sir, what sort of jobs, under mutual fund or AMC companies that we can have, I'll give you a couple of, the examples. If I talk about, the AMC companies like BNY, which is again AMC company, they have AMC, department as well. Then, in India, like HDFC, AMC, they have, HDFC also manage it. Even LIC company has AMC. There are many more. Right, there are many more at international level or at even domestic level. There are many companies, and they offer the different jobs like analyst for trade booking, recon, and it could be for a settlement. Then you might see role like fund accountant. See, for a fund accountant, you need to do maybe certifications or courses differently, because accounting, which is something complex, so you need to understand that, so that you can tap more and more opportunities in a fund accounting space as well. And fund accounting, which is, I would say, the growing the job market, and even highly promising. You can tap the opportunities in domestic market, even as well as in international market. Because if you ask me my background, because I'm from fund accounting, and I have supported thousands of people, thousands, or I would say, if you ask me precise number, like around 5,000 the professionals I have supported globally to work as a fund accountant, because the fund accounting, which is highly growing at the moment, and you can tap that. In terms of qualification, see, anyone can, means graduate who has a sound understanding of fund accounting terms, or the fund accounting part, you can enroll for such roles, and you can work with BNY, ZP, Goldman Sachs as a fund accountant. If you ask me salary, fund accountants, they're earning 5 to 6 lakh at an entry level, and at experience like mid size, they are earning around 20 to 25, and at a director level, they're earning even 1 crore as well. Then another role you can find, like the reporting analyst for financial reporting. So you can tap such roles, work as a reporting analyst, and earn good amount of money with the BNY, HSBC, because HSBC is also one of the the international partner where they provide AMC services. Even Northern Trust also they have a mutual fund business line for a reporting and accounting the roles. These are the roles. Maybe you can see the further hierarchies like analyst, senior analyst, team lead, manager, ops manager. That is something different. But I'm assuming all you guys are like the freshers, so you know you can enroll for these roles. All right. Yeah, this was all about mutual funds. I'll means you can, even I have my YouTube channel, you can go through it because we post lots of content on the mutual funds accounting, hedge fund and private equity. You can go through it. So I have already posted my YouTube channel, so just click on in the fund accounting and just go through it. Because but yeah, I think this is enough from the your course perspective. The whatever the discussion that we had around mutual fund, I think which is enough, because we have covered everything: structure, the basic of the understanding of mutual fund, right, the role of fund manager, the asset allocation, the expenses, and the types of the asset classes like stocks, bonds and money market. Because the instruments we have already discussed all of that, right. I think money market, we were pending with money market instruments. Money market we have discussed CRR, SLR, but I think we are pending with instruments. Maybe tomorrow we'll cover that. Maybe 30 to 40 minutes we'll spend on a couple of instruments. All right. So this was all about mutual fund. And there are two other products which are pending, because we won't be able to cover at the moment, but we'll cover it tomorrow: hedge fund and private equity, and even venture capital funds. So yeah, I'm done with the mutual fund. So you can ask guys